Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. Today is a Friday session and after the just couple of hours, once the US session ends, we will be taking a break and all of us will be having fun over the weekend and those who made good amount of money, they will be having of course little more fun compared to those who didn't really have that good week. But of course, we can always change our fortunes around, and all we have to do is work out the system where we will have more probability of ending the trades on a profitable note. So for that, we have to learn these various indicators available on the platform provided by the Dukascopy, the JForex platform. And today we are going to consider one such indicator. The name is percent Bollinger Bands. So this is one of the derivative of the Bollinger Bands. And in the last session itself, I had given the explanation of another Bollinger Band derivative, the Bollinger Bandwidth. Now we will consider this percent Bollinger Band and how exactly we can take the advantage of this particular indicator, what it is all about. So let us now head to the JForex platform. All right, so here is the Euro USD hourly chart, and on it I will plot the percent Bollinger Band. There are multiple ways to find the percent Bollinger Band. It is amongst the overlap studies. So you can go to this list, and here you will find it where it is. Just let us check. I think these indicators are listed as per the alphabetical order. So it is going to be below the M. No, it's not here. Oh, it seems to have pulled a vanishing egg, but that can't be the case. I must have missed it. Mm-mm-mm. If we are unable to find it like this, all we have to do is a quick search, and which we are going to do indeed. All right. So let us now go to the quick search. So if you don't get that particular indicator, then you simply type in the name and you can easily find it. So here is our this indicator, the percent Bollinger Band, and this simply you can say percentage representation of the volatility. It is not really much different. The representation is only different compared to the actual Bollinger Band. So if I plot the Bollinger Band, you will observe that this range of 0 to 100 is simply the range of the upper and the lower band. Whenever we have the price action in between these two bands, the output of this percent Bollinger Band will remain within this range. But if the price action, the closing value of the last hourly candle, as we are using the hourly time frame for this charting. So if this last candle, I will say candle. So if you use a different time frame, then it will remain still valid. All right. So if the last candle close is below the lower band of the Bollinger Bands, then in terms of these percentage Bollinger Bands, we will have its value dipping below these 0%. So 0% is indicative of the lower band and the 100% is indicative of the upper band. When we see the closing price rising above these upper band of the Bollinger Band, then on the percentage Bollinger Band, we will have this value rising above 100, and it is unbounded in the sense that it is not really the case that we will have 1000 or 2000 output value, but you can never be totally sure in the market, anything can happen. So I'm not going to put a cap on that, and all we can do is keep these three key levels in mind. The 50 is representative of the middle band. So if the price action is concentrated in between the upper band and the middle band, then we will have the output of the percentage Bollinger Band in between 50 to 100. If the price action is in the lower bracket within the middle band and lower band, then we will have the output of this percentage Bollinger Band between 0 to 50. And then, as I said earlier also, if we have the price action above or below the below the Bollinger Band, then we will have this extreme deviation taking place, and we will have the output value of the percentage Bollinger Band above 100 or below 0. And these are the levels which we can try to exploit. You can look at it two ways. You can consider it as an overbought or oversold scenario, or you can flip the formulation, flip the interpretation, and simply say that this is the extreme strength trend. So you can also use the same system to gauge the strength of the trend, and if we see the price action sustaining at those extreme levels above 100 or below 0 for a significant amount of time, then that is going to be a marker of the strength of the trend, and we can say that the strength is quite high for any particular trend, whether it is bullish or bearish, and we can try to ride that trend. We can continue to look for the trades in the same direction, and that is also a system which is likely to bring in profit. But it is going to bring in profit in trending markets. We have two situations in the market, or you can say three situations in the market. We have bullish tendency, we have bearish tendency, and then there is another thing that the underlying instrument doesn't really go anywhere. It forms a range and it trades within that range. And in those situations, you can interpret these deviations as the opportunities to go contra directional trades. But as I said, we have to keep some rules in mind, keep, keep some levels in mind. If those levels are breached, then it is better to get out of the trade and consider the strength to be quite strong for the given trend, and it's better to trade with the trend. But we can't really be sure. It is not going to work 100%, and no indicator is going to work all the time. So the case is similar with the percentage Bollinger Band. And to avoid certain complications or to make things simpler and also meaningful, we can use a combination of various indicators. So that extent we will be protected when the indicator fails on some occasions, or even if it fails on many occasions. But as long as it is going to help us in finding the strength of the trend, we will be using this indicator, and for that we can consider this formation. So simple classical interpretation is that whenever we have these output of the Bollinger Band crossing above 50 from below 50, it is indicative of the trend picking up strength from bearish to bullish, and we can continue to look for buy trade opportunities. If this crossover happens in the opposite direction from above 50 to below 50, then that can be used as a sign to go short. And considering the range of the underlying instrument, you can define your stop loss and target levels. So that is one way to look at it. Other is, as I said, we can go for the extremes as overbought or oversold scenarios. And another way is to go with the trend. And in that context, if you see that the trend is strong, so you will need multiple confirmation points. So suppose if we get the break of the output of the Bollinger Bands above 100, and then it dips again and then again it comes back, that can be considered as the sign that the strength is quite good and it is also being sustained. So that might be the time to go for the new trade on those levels. So here we have those kind of situation. Here also similar thing happens. It is the time 9 GMT, somewhere around here we have this shallow dip. It is not really much deep, then again it rises, then consolidation, and then there's quite big rise from those levels. So we have this kind of situations taking place. So we can use this formation whenever we have these sustained price moves on those extreme levels. That is also indicative of the fact that the trend is quite good, and it might be better if we stay with the trend and go for the trades. So you can use this as an important critical marker. If it is not really sustained, and if the reversal happens within these lower time frame, it just dips and it again comes back, then it is better to consider it as a some sort of deviation from the mean, and we can expect some retracement to take place. But if on those extreme levels, if the price action is sustaining then we have to be careful, and rather it is better to consider that trend to be strong and then start looking for the opportunity to go long if the value is above 100 and go short if the value is below 0. All right, so that's how you deal with these valuations of the Bollinger Band. Now let us consider the editing options provided on the platform to make this tool customizable as per our need. So this is the standard default setup where the moving average period is of 20 and the standard deviation is 2. You can increase or decrease this combination. All you have to do is type in the given candle period which will be used for the calculation, and then you can also alter the deviation. If you want to lower the deviation, you can reduce. You want to increase the deviation, you can reduce. So we keep the standard deviation at 2. I'll just show you how the changes in the calculation period results in different scenario for this plotting of the percent Bollinger Band. So here we have the sustained moves. All right, and now let us try to extend it further. For that I will go to 100. We have this now plotting of the Bollinger Band within the range but on those extreme levels. So here we have this large trend defined for the 100 candle period, which is 400 hours, as we are using the candle period of hourly. So this is a trend which is strong and it is also sustaining. So you can consider that this is going to give you good amount of profit if it continues to trend in the same direction. So you can go for a shallow stop loss. Always make sure that the risk reward ratio should be in your favor. If you are taking the risk of say 20 pips or 30 pips, then at least go for the risk reward ratio of 1:2, or if possible even more than that. But never trade in a situation where you can lose more money than you can make. So that is not going to work. And for that, whatever formulation you use on the indicator, it's not really going to be that helpful, as eventually you will lose more money cumulatively than you make, even if you happen to make more correct trades than incorrect ones. And for that, we have to go for the risk reward ratio, which is also favorable, along with these various technical formations which we feel have more statistical probability of bringing us profit than losses. All right, now coming to the editing tools, editing options. So here I am going to bring it back to 20, the default combination. All right, then we consider the output of this indicator if you want to make it more stylish, and if you don't really like this dull blue combination, so just make it more colorful. Let's see how it will appear when I am using the orange color and making this output more stylish. If you want to use this plotting of the bar chart, then you can go for this combination, this style. If you want your line to look more stylish, you can go for this kind of formation. All right, so this is now looking a lot more stylish than what we had in the first instance when we were using simple dark blue line. Now let's see what more can be done. So we have this output. If you want to reduce the transparency, it is with the reduced transparency. Then again, what more can be done? We consider the levels. In most of the trade indicators, we don't really get the output options for defining the levels, but here we have this option where we can define the level. So we have three levels which we consider critical. If you want this combination to be altered, you can do that. You can change the style, you can change the level. Now I am going to change this lower band, and as I am bringing it more close to the middle point, you can see that. Let us try to make it 40. Then you will observe that it has now shifted quite close to this 50 middle band, so we can make around these changes. So it's always up to us where we want to define the critical levels. If you want the critical level to be defined at minus 150, so we have minimum of 134, so let us take the extreme value of 134, and here also we take the extreme value provided on the platform of 256. Alright, so we have this case where now the newly defined extreme values are hardly reached. We don't really see many instances where the extremes provided by us are being touched, as we have widened the range, and that has resulted in lower times those extreme levels being reached. All right, so these are the changes you can do. Now I am going to restore these levels to the default combination of 0 and 100. The middle band remains where it is. All right, now what more can be done? We can define the recalculation of new candle to be done only when the new candle is plotted. So if you opt for this box, then this value, output value, will remain constant for whole of the candle period, and it will change only when new candle period, a new candle is formed after this given time period is over. And if you don't check that box, then it will keep varying depending on the current closing price for that particular candle. So it's pretty simple to understand what's going on. Highlight the time period zone which has been used for calculation. If you do this, then you can simply go to any of the time period under consideration, and you will see what is the total candle period which has been taken into consideration while arriving at that output value. All right, now next editing option, calculate from the custom data. If you want to customize the calculation, you can opt for the instrument of choice, or you can simply use the instrument from the chart. Same thing you can do with the candle period. You can use it from the chart, so whenever you will change the chart, the candle period will also change along with that. But if you want the calculation period to remain constant, then all you have to do is opt for any of these options from 10 seconds to 1 month, and the calculation will be derived using that particular combination you have chosen. Side, the ask side or the bid side can be also kept fixed if you want to do that, or you can simply use it from the chart. If I opt for this box, then I will have the indicator plotted on all the candle periods which are available on the platform. Whenever I change the charting period from one time period to another, it will be plotted. But if I uncheck this box, then I have to define on which candle period this particular indicator needs to be plotted, and only on those candle period this calculation will be visible to us on this lower side of this chart. So that's it. And with this, we see that all of the options are also over, which were needed to be explained to you while making the use of this platform as easier as possible to understand for all of you. So I think my job is done, and now I can sign off for the day and for the week, and I can't really say for the month. Maybe next week I will be able to say that now it's also time for signing off for the month. So weekend day it is, and I will be back on Monday. Till then, I will hope that you will try out this indicator and see how you can customize this indicator to look for profitable trading opportunities. So that's it from my side for today's session of JForex Indicators Explained. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying out this indicator and to get the hang of this cool platform. The link is also there, so do check out my bio. Thank you all for joining in. See you next time on Monday. Till then, goodbye.